Not a lot was happening with AMC stock today, but the story still remains whether or not investors are going to approve the 500 million potential new shares of AMC stock. Now, this is very important because we're reading a lot of articles here. A lot of people are confused. Like, is this a good thing? Is this a bad thing? Well, let's jump into a few articles here, see what the CEO is saying. Look at a couple past articles that we were seeing back in December just to remind everybody what was going on back then and how it could potentially be doing the same thing right now. So if this sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. I'm here to make 2021 the best year ever. If you haven't subscribed to the channel yet, make sure to click that subscribe button and become a bro. We're here every single day and we're growing our portfolios together. All right, now AMC stock, we know that this is an exciting opportunity, and opportunities like this do not come around very often. And so guys, it's absolutely exciting. I love talking about it. I love seeing the stories out there. And really, I love all of the feedback that you guys give too, because, you know, we're in this together and there's something special about being in a movement like this with a bunch of other people. All right, now let's jump into these articles, see what's going on here, because if you watched the video I did yesterday, you know that AMC stock had some very good news. The Godzilla versus Kong opened up at the box office, did a lot better than expected. I believe it did roughly like $48 million. And it was streamed simultaneously on HBO Max, right? If you have HBO, you could watch this movie for free at home, yet it had an amazing weekend, beat the Godzilla movie from 2019. I mean, we're in the middle of a pandemic here. Movie theaters aren't even fully opened yet, and yet we're doing better numbers than we did in 2019. So if you want to go back and watch the video we posted yesterday, you can see, you know, some of the reasons, but a lot of it has to do with the built-up demand and people wanting to get out of the house and wanting to go to the movie theaters. So let's just read a little bit here from the CEO, Aaron, of AMC. When I look back over this pandemic, the thing that I'm most proud of is that AMC survived. There are a lot of people who wrote the company off. We raised almost $4 billion in debt, equity, and concessions from lenders and theater landlords. And we've asked our shareholders to approve another 500 million shares, as this is a huge potential offering here. 500 million shares could more than double the shares outstanding and really dilute current investors. But it says, approve another 500 million shares. Not that we would use any of that anytime soon, but we're going to make sure that AMC was a very successful company for 100 years. We're going to make sure that AMC Theaters is around and a successful company for the next 100 years. Now let's talk about this just a little bit. We're going to jump back to an article that's from December 2020, end of last year, and kind of compare it to what's going on right now. Now, December 2020 was a completely different time than current time, right? They're currently asking us for 500 potential offering of 500 million new shares. Now, at the current price, they could raise about $5 billion and pay down a lot of that debt that they incurred during the pandemic. Excellent. Great. Everybody loves a lean balance sheet, but it's not the same as 2020. We're not facing immediate bankruptcy. Revenues are starting to increase again. And at the end of the day, should we have a leaner balance sheet because we dilute all of our shareholders? Or should we have a leaner balance sheet because we increase revenue, we start to run more efficiently, and we're able to pay down the debt that we have because of our business operations? Now, that's something we need to think about, right? If AMC wants to be a successful company, if they want to last 100 years, are we just going to have a secondary offering every 5 or 10 years? Do we need to just go out and raise more equity every few years and dilute shareholders so that we can continue running things? Or do we make sure that we're running things in a way that we can have a positive bottom line? Something to think about moving forward. And look, it sounds great. Kong, I'm excited about it, right? Kong opened up, blew away expectations. People are wanting to go to theaters. And now not only is the stock performing well because people are holding it and they're wanting to squeeze out hedge funds, but the stock is performing well because the company is actually performing well. So let's just go back to 2020, December 2020 real quick. And it says, this article here, I'm going to copy or link both of these articles in the description below. So if you guys want to go through and read the full article, absolutely, it's down there. Go ahead and check that out right below the Weeble link, right? If you want to invest, check out that Weeble link. But it says that, this one's from December 2020. It says, shares of AMC fell on Wednesday after the world's largest movie theater chain filed with the SEC to offer as many as 50 million new shares as it seeks to avoid bankruptcy. So here's the difference. Right now, and this came right after a 200 million share offering. December 2020 was terrible times for AMC. They were face to face with bankruptcy. The stock price was around $2 per share. They needed to offer shares if they expected to survive. It says right here, and in the event that such liquidation or bankruptcy proceedings, holders of our common stock and other securities will likely suffer a total loss of their investment. This is if they could not raise the extra capital, they would not be able to continue operating as a company. So here's what investors were faced with. Dilute yourselves or potentially go to zero. Now, in this situation here, when you're faced with dilute yourselves or go to zero, a lot of people are going to choose to dilute themselves so that they stand that chance to fight another day, so that they stand that chance to continue investing tomorrow, and their shares aren't going to go bankrupt and go to zero. So that was the major difference back then. Face-to-face with bankruptcy, now we're not face-to-face with bankruptcy, right? Now, executives at AMC are wanting to offer these new shares for a couple reasons, right? We know that retail investors have absolutely skyrocketed the price of AMC, right? Yes, AMC executives did a great job surviving the pandemic. They did what they had to do. They took on a lot of debt, but they kept the company alive. But we know that it's investors like you and me, the retail investors out there who are holding this stock, who are willing to hold this stock, and who want to see the stock price move higher that really kept this stock price alive. Now, we're not facing $2 per share anymore. We're at $10 per share right now. So now the company wants to go out, offer 500, they say that they're not going to do it. They just want the ability to do it. But guys, when you're tempted with $5 billion, or if we squeeze the stock price to $20, $30, $40, if you're tempted with, 20, 30, $50 billion of potential equity that you could raise for the company, I mean, think about that. If the squeeze on AMC occurs and the stock price is at $100 per share, they could go out and raise, $50 billion for AMC, pay down all their debt and become one of the greatest companies out there? Excellent, right? They would have a lot of cash on hand, but what would it do to the share price? The share price would absolutely plummet if they went out and offered all of those shares. Now, if you don't believe me, go down, read the articles below. As soon as the company starts talking about offering these new shares or actually offering the new shares, the stock price moves lower. It always happens. Now, of course, if investors are still out there willing to buy, hold, this could be an endless game. Okay, I'm just going to leave it at that. This could be an endless game if you're expecting a short squeeze. But AMC is out there doing secondary offerings. Who do you think is going to be first in line to get those shares? Do you think that you and I are going to be first in line to pull these shares from the secondary offering? Institutions, hedge funds, suits are going to be first in line to get these shares, to cover their shorts, and to give AMC money. Then the CEO, the executives at AMC look like heroes. They survived the pandemic. They paid down all of their debt. And you and I are stuck holding shares at $2 per share again. I can't see. I don't want to say that I can't see a world in which this could work out, right? It obviously could work out. I never want to say that the possibilities are non-existent, right? Because I always believe that there's always a chance that something happens. but I can't see a very likely possibility that this could ever be a good idea. Sales are rising right now. Revenue is increasing. The industry is lean. Demand is built up. People are going to want to spend their money at the movie theater, okay? Let's give it a run first. We're not facing bankruptcy. Let's see how it works with people returning to the movie theater and build this great business by doing great business. That's a concept for you, right? We could just go out and raise some free money. Why don't we just do that? Well, before we dilute all of our shareholders and all of the people who actually own the company, why don't we see what the company's potential is? Why don't we see what the company can do? Do the work. Don't take the easy way out. Don't raise this equity through the secondary offering. Allow AMC to see its potential, see where its revenue can take it, and pay down your debt the old-fashioned way by working. Now, guys, if you're brand new to the channel, make sure to click that subscribe button. We're here every single day. If you join the channel, you become a bro, and there's a lot of us out there. We're over 10,000 strong right now, and I'm absolutely loving coming here every day, doing these videos. I have a lot of fun with you guys. There's a link in the description below for Webull. I mentioned it before. If you sign up and deposit $100, you're going to get a couple free stocks just for doing so, and they are giving out shares of AMC right now. So if you want to join the movement and hold AMC in your portfolio, but you're not exactly willing to go out and buy the stock right now, you could get a free share just for opening up that account below and depositing at least $100. Now, guys, it always helps when you share the video. Not only does it help the channel, but it helps spread the word of what's really going on here. So if you share this video, you can do so almost anywhere and tag me at Claybro. I would love to follow you guys back and just really see what everybody's interested in and interested in investing in. Now, until the next time, I hope that each and every one of you have an awesome day.